Good morning. Um, well, not so much a prediction, Roland. It's just an observation of where prices are at here. And, the 200 MA being right down there. I think it's pretty amazing to get down there without a retracement whatsoever. I don't know if it's ever happened before in past history to have such a decline. My memory isn't that good of over the last several decades, but to have multiple red bars dropping to the downside over a short period of time down to that 200 MA, I think it's a pretty phenomenal event that we're seeing here. So, just going back a little bit for some of the things that we covered and having pointed out the ridiculousness of the wrong way option traders getting so bullish on the long side while risk was rising of declining breadth at that time, and the extension of the market, having written in the letter how the NASDAQ 100 was almost 8% above its 50 MA, historically nosebleed territory and such. And now all of these institutions are, just jumping over themselves, hitting the bid to get out. I think it's a bit of a historic event that we're all witnessing here. Another one for the experience that we all gain as market participants over the years. I've had a lot of them, and I honestly have to go back and look at the charts, but to have a 10% decline in this short a period of time, without at least a narrow range bar or a 1, 2, 3 continuation pattern, some type of stabilization, it's really something. So here we are down at these levels here, and every institution is aware of where that 200-day moving average is. Maybe not. Well, I'm sure that they do know where it is on the futures, but looking at the cash market, of course, they know where it is down here. So the futures are down there, probably leading the way. And you should be aware of where that is because when it hits there, everybody's going to be watching who's going to step up to the plate and buy, since it's right down there. And your platform should be able to do something like this, where you set an alert when prices cross and you know that it's down there. And you let your computer do some of the work for you, right? You can't have 14 eyeballs. And this is an obvious reference point, just like the 50 was, but it gapped down through it. And so now at the 200, I assume that the 100 is somewhere in here. I don't know how many institutions look at the 100. I know some people do. Anyway, it's through it. Now at the 200, getting through this swing low, there is little to no support. So this subjective reference point with little to nothing to the left there is going to be the last man standing before, continuing to move down. And maybe eventually it actually does that. We'll see. So down so many days, the wrong way option traders are getting a little bit of a payday today. Of course, they started loading up on puts, and it came down here through the lower band. We'll see if it get a close down here at 1.2 today. McClellan is down here at 286. If the selling was to continue today, historically closing numbers below 300, the market will be up the next day. We'll see how it ends at the end of the day here. All right, let's go through the rest of these markets. We already looked at the ES. It's, a few points away from that 200-day moving average. There's a little bitty support there. So maybe it overshoots it, which might be the ideal, where you have a panic where it blows through that 200. And okay, my buy stop on the ES, it doesn't look like it's going to hold here. I had a buy stop in just above this little edge up here. Yeah, 30.72. I'll leave it there for now, just in case it rips. Actually, it was above this high right here. If it just rips back up here at the open with a little downside shakeout, which often does happen. So we'll see which way it goes. The NQs, which have been showing relative strength, you can see it's down at this prior swing low and about down 11% here and not lifting off either for the moment. So on the weekly, this is the 20 MA, which would be lined up with the 100. So we know that the 100 MA is around this area here. So that's one of the reasons why I don't put it on the daily chart. I don't like too many squiggly lines flip-flopping around. Getting down to the 200, well, that's theoretically not going to happen today. Maybe eventually it gets down there. We shall see. But being down here also 10, 11%. The ES down 10, 11%. You hear the media talking about correction territory. Yeah, no kidding. Especially after a vertical drop to the downside like that, there could be a sharp rise off of this, even in a bear market, which let's just assume that this is a bear market for now, even though it hasn't reached that 20%, and sometimes it gets down 20% historically and they start yelling bear market and that's the low. So those historical measurements, you just cannot rely on that as for your decision making. That's just ridiculous. You look at the chart and see where any percentage drop is in the area of support or the lack thereof, and you look at your market internals and so on. So we'll see what happens here. So far, no stabilization for the moment. Dow, which has been showing relative weakness, just blasted through the 200 MA, which was aligned with support. And this is what we look at as master trader, as we look at subjective reference points like a moving average. We know it's a moving subjective. We call it a visual aid. A lot of institutions looking at it. We look to the left of it and say, is there some price support? And there was. And probably intraday, you can see the wiggle here, the tail. So there was some reaction to it, and now it's blasted down through it. The next reference point is down here. And out of curiosity, so that's about a 10%, and down to the swing low would be almost, well, let's call it 12% at 26,000. So maybe that's where it needs to head. And that happening in a short amount of time, as I said, is just amazing. That kind of a drop in a short amount of time without any type of stabilization whatsoever. Now, intraday, there was some stabilization. And I know that because these two ranges are overlapping each other. So there was a little attempt to turn it higher there. And anyway, it went down through it. And you can see the same area here. It's trying to start to hold here. But well, we'll see. This would be the obvious place if prices should get down here, since it's in an area of price support, for a reversal of some type to happen. So just, again, an amazing drop in a short amount of time. The Russell basically has nothing to stop it from going down. 1,500 might be a reference point since it's a whole number there. Ultimately, maybe it's coming down here. One of the things to say, in drops like this, it is easy to get the emotions flowing and start projecting things that, may or may not happen. Look at the chart, especially as intraday traders. The retracements can be vicious in a market like this, where the short covering just rips things to the upside. And you can incur some substantial losses if you're short and you're a deer in the headlights as an intraday trader. That isn't to say that after a drop like this, whatever the retracement is, there will be sellers on that retracement looking to, get out of long-term positions where prices then, historically prices come down and revisit a low with a pattern like this. And, that's where big moves start again after repairing some of the damage. So in any event, as shown, the internals are close. We'll see if those numbers, stay high, and get things into that bullish territory. And then again, we'll see some type of a retracement that will be sold into, but who cares? We're looking to take advantage of things on a short-term basis and profit from that. And then wherever it retraces to, which will set up a short setup. Now, I want to even point out a drop like this, and I don't care whether it's a daily chart or you're looking at a 5-minute chart, but a drop like this that creates such a tremendous void of resistance overhead, it could be a very tricky pattern to short. So you have a lot of people think, oh, I'm going to short this market when it retraces. Well, the first retracement is not going to be the easy one because there's no resistance there and it historically wiggles. So what you wait for is what we saw intraday yesterday. And if I can scroll back here, I know this is a small chart, but that was a great little short setup yesterday with this double top. Now, it's not a perfect example of it, but if we look at this on the spiders, which this is showing, the overnight data. Anyway, these double tops like this are what you want to look for to short after a big drop where things come back down and retrace into that void. That's your high probability setup on the retest, where we call it creating resistance within the void. Okay. Oil, right, dropping down through, now heading down to the next level of support. So all of this, while look, what we hear here in the US anyway, we have a client that's over in China and he's emailed me and said it's a disaster over there. And just things closing down, but we don't see that whole, but we see the reaction to what's happening here in the markets, which says this is a serious problem. And when we see, like we covered yesterday, right, we reviewed yesterday, these yield curves inverting, all of this says that this is a real problem. And what's going to happen with it? I said to my wife yesterday, and because we see, okay, we hear the politicians, Trump saying we're going to spend 2.5 billion, the Democrats saying, oh, we're going to need more money than that, for all of this. And it's like, okay, there's 12 people in the US that have had this. What are they going to do with $2.5 billion or $8 billion? Anyway, it just continues to reinforce this problem is more serious than it appears to be here in the US anyway. Because the charts are telling us, and here we have bonds breaking up through here, which means yields are going down, which makes those yield curves reach the longer term ones reaching closer to inversion, which the shorter ones have already done, which means all of this is communicating that there's going to be a recession. I mean, we're waiting at things to line up. We haven't gotten those other yield curves inverted yet, which historically have predicted that accurately. But the markets are telling us that they believe that that's going to happen. Right? So when we hear certain events happen, we go and look at the charts and intermarket analysis to say, do institutions, traders that are displaying their beliefs, right? Beliefs aren't facts, right? If they were facts, they wouldn't be beliefs. But we operate on beliefs about the future when we place a trade. So those beliefs that are operating right now are communicating that, yes, we believe that this is a very serious problem and that there's going to be a recession and that there's going to be a reduction in corporate profits and stocks are going down and all that fundamental stuff. But the charts are saying, yes, there's a belief in all of that right now. And while we're looking for a move down to these levels discussed, right, for a short-term retracement, this cannot be the end of this after such a vertical move, right? But it could result in a long period of digestion, right? It doesn't mean the markets have to continue to move lower. They're going to move lower. I don't know if ultimately this is the place. That's why we look for retest patterns. But ultimately, the markets are going to move to whether this is it, where we see it building support, or whether it's down here, where institutions believe that there is little risk and there's great opportunity at these levels to own whatever it is that they're interested in owning on an intermediate term basis, right? That doesn't mean the wiggles that'll happen intraday won't be crazy, but of course they're not going to be interested in selling. They're going to be interested in buying the dips, whereas right now, all they're interested in is selling the rallies, even on a 5-minute chart. Okay? Now, let's get that out of the way. We looked at bonds. Gold is moving back up again, right? Just kind of, it's had a heck of a run, just flip-flopping here. Silver came down real hard. It's stabilizing in this area. Maybe it's worth a buy with a stop below these levels here. And the transports, obviously, right, reinforcing the whole recession theory, with yield curves inverting, with transports dropping like this back down to the bottom of the trading range, where it was trying to get through the top of the trading range for 2 years or so, and that's not happening. So it's reiterating, this virus is not your common cold, and it's playing havoc with the markets. Is it overcooked yet? No, maybe not. We'll have to see what happens here. So that's it for me, Dan. All yours.
All righty. Yeah, I mean, I heard you say let's see how the internals close, but I think with the gap down, they're obviously going to get much more extended than the closing numbers yesterday. But yeah, we're just going to sit back here in the first 30 minutes or so. Oh yeah, Triple M. I thought you were saying it was muted. Yeah, I'll get to Triple M, sure. Somebody on YouTube is asking. Dave and Buster's, you got to play. See how many symbols I know, Greg? I know so much trivia. Dave and Buster's symbol is play. All right, so anyway, so all I'm doing is reinforcing. I do have a bullish bias for today, but it has to set up. It has to set up. All right, let's take a look at things. We have yeah, I'll get to those 2 trades in a second. But our gift guild, I don't think I posted it to you all. I sent it to Telegram. We had a buy of puts in the Qs under yesterday's low in our advisory letter, so I had to cancel that, obviously, with the big gap. But we do have a gift and guild here. And thank you, somebody in the trading room. It's the one that brought it to my attention when it took out yesterday's high. I took it off my radar when I saw this nasty retracement. And then, good for you. You said, damn, what about now? I said, absolutely, hit the buy button. So we sold half pre-market at 80 bucks near these prior highs, and we're going to sell out of the money calls on the back half with the very high premium where we can get leg into a covered call. We also have Echo Alpha was a call spread we did yesterday, just saying it ain't going over 112 in 8 days. That's gapping down. We'll look to take half profit. Let's look at gappers. Gappers. So Triple M, some guy came out, gave it an upgrade. I don't listen to the nonsense reasons. I think he was blabbing about, them making mass and some type of everything's tied to Corona now. See, the public is just so brainwashed and getting led around by the media, whether it's pot stocks, whether it's the internet days, whether it's the Bitcoin stocks, and now everything is Corona. So is Corona going to help or hurt, my stock? So this guy comes out on CNBC, Oh, I'm giving a Corona upgrade. And look, 15-minute chart, it rips. So all we care about is a tradable opportunity. This is a very bullish pre-market 15-minute chart. This is a wide range igniting into resistance. This is if it holds right here, third retracement, and reverses right in these levels right here, then we got 9 minutes to go to the market. Then this could be a great day trade for, target around here, 156, into the gap fill. So that's a beautiful day trade setup. Yes, it's not a swing setup because you're swimming upstream. If I am going to swim upstream, I want something more extended, like we're going to look at these airlines and cruise ships. Look, this is a waterfall, relatively equal opens and closes. This is what we call, and I posted it in our Facebook group and also to our subscribers. This is what we call it's a climactic buy setup, but we don't have the turn yet. So the turn can happen in different flavors, right? It can happen on a gap up, it could happen on a bottoming tail, whatever the case. But look at the monthly. The monthly is approaching major support at 35. So so anyway, my story is, I'm mixing two stories. I'm comparing this to your triple M, as this one is a better swing candidate because of the fluid bars down. You don't have as much in triple M, but I like triple M if it sets up for a day trade. And I also like triple M as a put spread candidate for tomorrow. Back to the 15, it really needs to hold right here for retracement principles. But if the market holds, and it looks lower now, so don't pull a McGraw on me and start selling put spreads. Maybe we sell off another 500 points in the first hour. I don't know. I have no idea. So we sit back and wait and observe. All right, so enough of that. So yes, I like that. Somebody asked about play, Dave and Buster's. It's kind of similar, it's getting way extended. That's a waterfall on the 15-minute chart. It's damaged on all time frames. But could you get a tradable bounce if it sets up with an intraday bullish close? So what would that mean? That would mean breaking the trend, the downtrend on the hourly, and then giving a beautiful double bottom, bullish W bottom on the 15. Then you can trade it. Start off with a day trade. All right, let's continue with gappers. We got a ton of them. Emmanuel, nice, yeah. That's Emmanuel. With that waterfall, I would have definitely closed. I would have definitely closed my puts also. So I think you managed that beautifully. Etsy 55.45, very bullish gap. Anything green is very bullish gap. Relative strength, like not a bullish gap. I take that back because you got to look at the gap to see if it's bullish, but it's relative strength. Triple M is the only Dow 30 stock that's green. So yeah, I mean, this is strength. You can keep an eye on it. Let me go through here. I only have 5 minutes and I have a ton of gappers. TDOC, oh, wow, big old gap, but nothing to do with it. I'd be selling it if I were in it. This little penny stock, it's a mess. You're gone. Plan, 43 bucks. It's getting whacked. It's not, I can't even see it on the daily chart, but the gap's too big. NTNX under 20, same. Wow, I don't know if these are earnings, but they're getting hurt bad. This this would have been, I don't know what, I'm assuming this is one of the Corona stocks, the way it's acting. But wow, that took off like a rocket. And now it's giving up $7. Wow. Wow, that's all I can say. Zoom, we had a put spread on this, and we just stopped out break even too early, but it still looks great. Let's keep an eye on that to put on a new put spread. It's holding great relative strength. MA is not a great gap. Well, yeah, it is 286. Wow, that's $12 gap down. Yeah. So I have MA on here. Just to see, this is not a clean fall at all. But the 200 is corresponding with this breakout area last November. So we just wait and see if it sets up a reversal around this area. And then, since, as I said yesterday too, there's so many damaged daily charts, my general approach, unless I get the fluid move down like I showed you on Northern Caribbean, Norwegian, whatever it's called, then it's just day trade long, or it's put selling, saying, yeah, it's slop, it looks like a short-term bottom, like that MA. So I put a bunch of airlines in here to see which ones we might want to monitor. ALK, I don't know, there's nothing there for now. JetBlue, very oversold. So look, it's down 7-8 days in a row, and it's on major support here on the weekly. Let's keep an eye on JetBlue. Love 47.35. It's overshooting support, but it's the waterfall. So let's see if it sets up for a put spread. And VIX is gonna be ripping higher here. So that means our put premiums are gonna get even more juicy than they already are. UAL 63. Yeah, even if these things take 1, 2, 3 days to set up, I'm okay. I'm okay with that, because we'll do beautiful put spreads. And that's why we did MT Live yesterday on selling credit spreads, and talked about the high volatility environment we're currently in, and that for put sellers like us, this is setting up to be a candy store. Delta's not ready. AAL, that's just a nasty downtrend. That's nasty. Look at this. It was $60. Look, it has room to fall. So I'm going to take AAL off my list. This one's, wow. And also for fundamental reasons, I don't like AAL anymore. Their customer service, in my opinion, don't get mad, and if you work there, love them. I'm wanting to use a cuss word, and I won't, but you know what I'm thinking. And the Wall Street Journal agrees, because they ranked them number 9 out of 9 in customer service. Wow, look at this breakout failure in RCL. That is another beautiful M top. That's an M, time symmetry, space symmetry. Let me write myself a note on that to add it to my M tops. But this one's worth watching, along with the Norwegian. All right, my volume was up too high. Ludwig, your drop down. No, Ludwig, I just said no. I just said I'm not looking for long swings. I'm looking for, if they set up, I'm looking for day trades. If they set up and short put spreads, I will consider swings. But like I said, there's so many damaged patterns that we got to be selective. But something like this, I talked about this, the Northern Caribbean, whatever it's called, Norwegian. If it can go down, come back up, and give me a reversal bar, then yeah, that might be worth swinging. But let's play it by ear. Yeah, space, it was climactic. If it didn't have earnings, I told you I was all about selling call spreads. That's just, all right, you see Triple M coming in now. So therefore, veto. I have no interest, the YouTube person. I have zero interest now in day trading Triple M or even selling a put spread. This was a pre-market little sucked you in on an upgrade. WLL looks, that's just nasty pain. $55 down to, the price of a Slurpee. Google, Google looks lower to me. I mean, how do you define oversold? This was a nasty